Okay. All right. So I think there was some audio issues with the other platforms. So I'm going to start off once more. Sorry about the absolute waste of past 10 minutes of your and my life, guys. Let's just start again. Um, we will go back to Nifty, and thank you to my very trusted assistant Nida for giving me this little bit of insight that nothing was audible or visible on the live stream that I was doing. This is what happens when I commit to doing live streams when I'm not really feeling my best. Anyways, thank you for sticking around, guys, and let's start from the top. So we're talking about Nifty. Now, Nifty on the weekly time frame. As I was saying, on the weekly time frame, Nifty has a bit of a mixed bag analysis. What it is telling us that okay, the looking at the broad trend, the trajectory remains upward, but um, the very last time when this rally happened, it touched the level of 60 but failed to go beyond it. So short term, it is looking bearish, and this narrative is also backed by the 75 and the daily time frame. The daily time frame, not so much. The daily time frame has okay, even the daily time frame actually. Okay. So on the daily time frame, what we are seeing is on the daily time frame, what we are noticing is here. See, here it violated the level of 40, and since then it has failed to go up and touch the level of 70, right? Which means that this bounce is temporary. Now, I want to enumerate one change that I've made on the charts. Okay. You will notice this video onwards that there is a green line on the level of 70 and a red line at the level of 30. Okay. So, why this has been done is because if you know about this quadrant that I've talking about quite a bit in the market, the market can either be, for the sake of simplicity, is either bullish or bearish. Okay, within the bullish market, it can go up or it can go down. Within the bearish market, also it can go up, it can go down. When do we make the most money? When we place trades in uptrends unfolding in a bullish market. So I am trying to focus all my energy, my resources, and my capital. So my resources, that is my analytical time, energy, and my monitoring, my capital, everything. I want to focus on this quadrant, which is where maximum profit and alpha resides. Okay. So in order to do that, what I have realized is that I have to work with stocks that are absolutely bullish, stocks and indices that are absolutely bullish and not sort of bullish. So what happens is that when an index or a stock breaks level 60 but breaks the level of 60, it starts to turn bullish, right? It starts to turn bullish, but it is bullish when it touches the level of 70. So what I have decided that when I do the RSI range marking now onwards, I will only mark positive if the level of 60 has been breached and the level of 70 has been touched. So far, what I was doing, if the level of 60 was getting breached, I was marking it as a positive range, as you can see here. But I want to change this now. Okay. So I want absolute bullishness to attain more certainty in the trades and improve my own probability of success. Right. So here, as you can see on the daily time frame also, it tried to turn bullish, but it did not make its way. RSI 25 period on the daily time frame of Nifty did not make its way all the way to the level of 60, 70, right? So so essentially it continues to remain in the bearish range, and we can expect it to decline and retest the level of 30 again, 30 or 40 again. On the price level, on the price structure front, if you see, I think 23,900 is a very important support that we should definitely look out for. Why? Because there are these two previous peaks, and also this acted as a support over here, right? So I think even historically, if you see around here also, it acted as support. So this is a very important level. Also, the 250 EMA is here. Now, you might think that, oh, it broke below the 250 EMA recently, so maybe it will do that again. Historically, if you see after a period of massive break below the 250 EMA, the price does come back to bounce back from the 250 EMA and resume its rally. Okay, so here also it gave a massive breakout. Here it came back to retest the 250 EMA. Right after that, it gave a big rally and then it broke the 250 EMA. Now I think it's just gonna come back to retest the 250 EMA. So that is what I believe is going to happen in the market. So 23,900 is what I'm expecting. Now, if you go to the 75-minute time frame, there's very interesting phenomena that can be noted. When this support was breached, 24,500 support was breached, right? Or rather, when the market approached it, it breached it very briefly, creating this little bearish trap, this bear trap. Okay. And then when it rallied and approached this resistance, it breached this resistance as well very briefly, creating a bull trap and again continued to decline. So I think for now, I would want a nice little closing below the level of 24,350, and 24,500 would be the first confirmation. 24,350 would be the second confirmation. Once that is done, then I think 23,900 should be quick work in the market. So the support will actually be between this 24,070 and 23,900 is what I believe for Nifty. Now, let's go in and look at other indices. We'll start off with auto sector. So, as I was discussing, the auto sector I think is quite bullish on the daily chart. It has not yet touched the level of 70, but I think it's getting there. It has established a higher high. It has broken above the level of 60, given a negative divergence, not given much correction, continued upward. So I think as long as it doesn't break or start filling this gap up, as long as it doesn't break below this candle's low, I think the auto sector in my eyes at least remains really positive. And if you look at the stocks, also the rally that it is showing is backed with good volumes. So I think the auto sector rally is here to stay. Next, we have the healthcare sector. Now, in the healthcare sector, based on the new change that we have made, we started marking it bullish because it broke above the level of 60, but as we can notice, it hasn't yet broken above the level of 70. It hasn't touched 70 yet. So this was clearly very, very bullish, and then it turned bearish, I would say, at this point, right? So this is the point where it broke below the level of 40. This is where it disintegrated, where the bullish structure overall disintegrated. The early sign of disintegration in the structure actually came in here itself, right? And this between this November 14th to January 20, November 2024 and January 2025 was like a transition period. And whether you observe that on momentum or you observe that on price structure, this is called a double top, typically a very potent bearish signal, or if you do momentum analysis, there is a negative divergence. Either way, the confirmation for both the things came exactly on the same day, right? The double top gets confirmed if the uh, low gets breached, intermittent low gets breached. So that happened, and the decline doubled itself. Right now, what do we see? We see that it has taken another attempt at rally, but it has failed to cross above this high. Now, this was very important. It should have done it. It has not done it. As a result of that, I would say Nifty Healthcare loses its position in the bullish segment and gets removed not to neutral to potential. We'll keep it at potential because it's still going above the level of 60. So there is a chance that it might, power through as long as it doesn't break below the level of 40 again. I'm going to say it has potential. It's not bullish, it has potential. Let's go and check out pharma from our fresh lens. I think again, pharma also is giving us a bit of a reality check with the new lens that we have put on. And I would say it is currently looking not that bullish. It seems like it has potential, but it's not outright bullish. So we are going to move it. And again, same rule, as long as it maintains itself above the level of 40 on the daily time frame, we will keep it in potential. If it breaks below 40, then we will have to move it to neutral, which basically means do not touch. Nifty consumer durable. Nifty consumer durable. Again, I have made this preemptive mistake. I don't think Nifty consumer durable is also looking positive, but it again has potential because breaks touched the level of 6C, broke above it, respecting the level of 40. So as long as it continues to respect 40, it has potential, but it is not outright bullish, right? From that perspective, even auto, if you see, is not outright bullish, not like bullish, but I'm cutting it some slack because of great volume activity that I've observed on the stocks. Consumption, CNX consumption, I would say CNX consumption was extremely bullish all throughout here because it was consistently breaking above the level of actually not even there. I think this is where it turned bullish and then it stayed bullish. Why would I say even this part that it is bullish? Because as you can see, it has not touched the level of 30. Had it touched it, it broke below the level of 40 few times. It threatened the bull trend, but it did not terminate the bull trend, right? So it came very close to it. But here you see it did touch the level of 30 multiple times. So this level of 40 breach is what I'm going to mark with a little bit of hindsight advantage. And I would say it is very close to reclaiming it. So I think it has great potential, but I wouldn't make fresh entries right now in this sector. I would wait for it to give a nice little pullback, just the way it had done the last time, just before the moment it turned bullish, right? So if you see, this is all bearish. No, this is bearish. This is all bearish, okay? um, and then here it went above the level of 60 and then respected level of 40, came back to the 250 EMA rally. Now, you know why I turn back to the past price analysis so often? As I like to tell in my advanced swing trade training program classes, the past price action that you can see on the charts is your cheat book, right? You need to realize that this is an open book exam. Every single time that you turn up to do your analysis, you're basically writing a test, correct? And you will get the results of that test few days down the line as the market continues to unfold. But this test is not a surprise test, or nothing is out of syllabus here because ultimately it's an open book test. All you have to do is go back and see what happened in the history at a similar time as right now, and how did the index or the stock or the currency or the precious metal or the crude oil or currency, anything, how did they behave then? That can be a very good guidance to what your answer is going to be to the question that you are being asked right now, correct? So, coming back, I would say consumption also has potential, but honestly, I'm going to let it be in the bullish for now because it's very close to the level of 70, and uh, it has acquired one of the two important criteria of being called bullish. It has established a higher high. All right. Since it has done one of the two, just like auto sector, I'm going to cut it some slack and keep it in the bullish segment. Next, we're going to look at PAMA. So, sorry, PSU. Bank. So PSU Bank, again, we need to redo some bit of work here because, like I said, optimizing for our most profitable quadrant. Super bullish up to this point. Here it touched the level of 30 ever so briefly. So we will mark it bearish from the point it actually violated the level of 40. And over here it started to turn positive. I'm going to delete this line. It's a distraction. It tried to turn bullish again, but it failed to touch the level of 70 and it failed to establish a higher high, right? So it does have potential, but it is not qualified to become bullish. It needs to establish a higher high. And in hindsight, because of course, hindsight is very important. And if you watch my videos, you know that I am a stickler for past trade analysis and past price action analysis, to constantly evolve as a trader. What I've realized is that lately I had a lot of conviction in PSU banks, and I had positions in. I have GTT set up in South Bank. I have analyzed Canara Bank. RBL Bank was something that I even gave recommendation in. But the price action did not play out the way I wanted. It did show a lot of resilience against the current market conditions, and in fact, RBL Bank is doing fabulously today. It's up 4%. But overall, the kind of momentum that I was expecting to unfold on these stocks did not unfold. And that is because of this. It's not outright bullish. It seems to be a bullish movement within a broader bearish activity, which is what the RSI range is indicating to us. FMCG, same story. It has turned bearish when it touched level of 30. So we've marked the structural breakdown since it broke 40. You're using a little bit of hindsight. And it has not turned bullish yet. So I have kept it in potential because it has broken above the level of 60 and is kind of respecting 40. But I do need to see it create a higher high and turn overbought on the daily time frames 25 period RSI. Right. Moving on, we have the Nifty Capital Market Index. Now, the Capital Market Index, from what I can see, is currently actually very bullish. And because it has not broken the level of 40 and not gone for 30, it continues to remain bullish. So I'm actually going to move it up to the bullish segment based on our latest insights. And I don't know why I have drawn this line. I don't want to draw this line because this is not a negative divergence. This is not an equal peak to this. It is not a higher peak to this, which is what would have been needed to call this a negative divergence, right? But I think this is a very interesting sector. 75-minute time frame. If we talk about the 75-minute time frame, I think it has turned, since it touched the level of 30, we can say that the bullish trend structure has broken down since June. And it started breaking in June. It became evident in around the end of July, right? That is what we are basically capturing over here. So the short term for Nifty Capital Market Index remains pretty bearish. So it's bullish on the daily time frame, but bearish on the 75-minute time frame. So what do we need? We need the 75-minute time frame actually to go overbought. Okay. We need this to go overbought, re-establish itself into a nice little bull trend, establish a higher high. And once that has happened, then my friends, this is going to become attractive. So now, because we've seen the 75-minute time frame and discovered this, I think I'm going to move it to potential, because we only want to keep those sectors in bullish where we are ready to actively seek positions. But Nifty Capital Market Index is not one such index at the moment, right? Reality, let's take a look at this on the daily time frame. So very bullish this point onward. absolutely turned bearish, turned very bullish, stayed bullish, 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 and then see over here it has not touched 30. So it came close to breaking the bullish structure but did not break the bullish structure. Stayed bullish for a very long time. But over here it touched the level of 30 for sure. So it has turned bearish in my opinion. And right now, even though it did try to rally, it did not go overbought. And here again, it did break below the level of 40. So the realty sector, I think it can give us another leg of downside perhaps. So we should be cautious. I'm going to continue to keep it in neutral. Next is energy. Energy from the new lens that we have put on with more clarity. What are we seeing? We are seeing, so it was very bullish here. I think the bullish structure set in this point and it kind of remained until here. And then from, I would say, this point onward, the bullish structure had set back in. It became outright bullish at this point, but the bullish structure started setting in from here. And then over here, you can see the level of 30 was touched, which means the violations, and here also a massive negative divergence. But since the level of 40 was breached here, this is where the structure started to degrade. So I think energy is actually quite contrary to what we were hoping. Positive divergence and tiny little breach above the level of 60 is actually something that should not be entertained, which is honestly, in hindsight, not surprising to me at all because even though we discussed so much about energy, when I went down to the stock level, I couldn't find anything that was convincing. And that was a little, that felt like a mismatch to me, but I couldn't quite put my finger on what it was. And that is also another reason why doing these live sessions and doing these analysis very frequently and going back and revisiting what I've done and what the outcome of what I've done has been is like it's just so educational, personally speaking. Now oil and gas again, definitely bullish, but over here started going above the level of 60. This is where the bullish structure was established. So you'll notice there is a difference between the time the bullish structure is established and identified becomes absolute, right? So over here again, broke below the level of 30. So the bearish structure started to become obvious here, and it is still actually not very bullish, and it has also started to violate the level of 40 again. So oil and gas continues to remain neutral. Next, what do we have? Infra. So infra was extremely bullish, and then you can see once it established itself above the level of 60. So this is where it established uh, itself and maintained bullishness. Actually, sorry, this is okay. It's very bullish for a very long time, the infra sector. And after this extremely long and extremely bullish run, it gave out with a massive warning of a massive negative divergence and is currently very, very not worthy of my capital whatsoever. So I am going to stay very far from the infra sector. Private bank. Now, the private bank, okay, I like this. So, the private bank is actually quite bullish. So, we can see the private banking sector turned bullish since August 20. Since then, it has been nudging the level of 70 multiple times, never touching the level of 30 really. So, I think private bank actually jumps right back to bullish, right? Speaking of which, HDFC Bank, I was looking at it yesterday, looked extremely, extremely attractive. So I'm going to revisit that immediately after this session. Let's look at finance. Now, what do we have in finance? Okay, so finance is also super positive starting since then, and it has been positive, and I think this dip also is offering us quite a bit of opportunity. So CNX Finance is extremely bullish. CNX Media, I am not interested in. PSU is very bearish. Do not touch, do not enter, do not trade at all. Defense sector overall continues to remain bullish, but the bullish structure is starting to get violated. It remains to be seen whether it actually declines down to the level of 30 to become outright bearish, or whether it turns up and establishes higher highs. So defense sector establishes a if the defense sector index goes above the level of 8,000, I think it will become very attractive again to purchase. So when few people who have recently done their portfolio cleanup with me showed me that they have a lot of few stocks from defense sector, I asked them to continue to hold it because this still looks like it has potential to turn around and deliver something. It might take time, it might take 1 or 2 years, but I think it's not something which is hopeless right now. Like reality and infra, I wouldn't absolutely wouldn't touch, because I think they've entered a multi-year correctionary period. So you might see some fits and starts, but don't mistake it as a rekindling of the massive bull run that you've already seen in the past few years. That bull run is over. Next, Bank Nifty. Did we access Bank Nifty? Bank Nifty is also definitely bullish, so we will move it back up to bullish, and then PSC commodity. Bearish. Metal bearish. IT very bearish. I think one market cap index that's looking attractive to me is the small cap 250, right? And just want to put it out there that I think since June 24 till date, now is the best time to start investing in any index fund which is based on the small cap 250. Do an SIP instead of a lump sum, but I think it's quite bullish. And now it's giving a pullback to the 250 EMA after establishing like a series of higher highs. And I know everything looks very chaotic right now, but typically that is the best time to invest in a small cap index. So if you've been wondering about fund that you want to start a disciplined SIP, and I would recommend don't do a monthly or yearly SIP or quarterly SIP, do a bi-weekly or weekly SIP. The more frequent your SIP is, the more compounding you have a chance of accumulating. So do weekly or bi-weekly. I personally do bi-weekly SIPs for my mutual fund investments. And yes, I also do mutual fund investments. Um, with that, now let's move towards doing some Q&A. So I am going to explore the questions which have been posted by our members on Zoom. So we have a question on Aisha Motor. By the way, if you also want to ask your stock queries, sorry about that background noise that you might have heard. I was just adjusting which PC. If you want to ask stock queries, all you need to do is go to this link. Hold on, I'm sharing it. Yes, this is the link. expinvest.in/join. So then you can join the session on YouTube and ask your links. Now, don't get pissed at me for this. It's not my fault that you have to register. It is what SEBI requires me to do if I'm going to answer your stock query. So it's a regulatory thing. Okay. But if you have generic questions, like the one that Vijit has asked, what is the minimum capital for swing trading? you can ask that on the social media platforms. Now, the minimum capital that you need for swing trading, uh, this is a very vague question. Sorry, but that's what it is. Now, if you want to draw livelihood, like if you don't have another source of income and if you want to become a full-time swing trader, then I would say minimum 1 cr plus 6 months, minimum 6 months of survival corpus is what you need. Now, why 1 cr? Because the market is unpredictable. You're going to have some good months, some bad months. So all in all, you should be able to make enough money in the good months to sustain you even during the bad months, and that has to be sizable income. That cannot be like a very small number, because there is an averaging out effect in the market. And honestly, now with the kind of inflation that we are seeing, I don't think even 1 CR is going to be enough. I was told the number 1 CR by a full time trader 15 years ago when I was starting my journey, 10 years ago in 2015 when I was starting out my journey. And that it blew my mind back then. But now that I'm here, it makes absolute sense. Like, you do need a big corpus. And for those who are just planning to start out, I think it's time for you to hustle, get a nice paying job, upskill, focus on upskilling yourself, and moonlight as an analyst to develop your skills, because this is very, very, very skill intensive and you cannot take it easy. I can see Atul Rastogi on LinkedIn has asked question to analyze KPIT. Atul, I would love to do it for you as soon as you can register on the link that I have given, because your request for KPIT will have to be marked against or recorded against your name and ID in my records. Okay. Cricket lover is saying this market is money taking. When is the market not money taking? I don't know what you mean by this market. It's this is a rigged game, and if you want to make money against the house, you're gonna have to be extremely skilled. Anurag Sangwan, again for Castrol India analysis, kindly join the link that I have shared. Ankit Srivastava, again request you to please join with the link I have already shared if you want your stock seriously analyzed. If you're just commenting for the sake of time pass, that's also okay with me. I don't mind you commenting at all. Mm. Let's look at Eicher Motor. Okay. You see what we've just discussed. In fact, I'm going to be able to really stretch this out. So, extremely bullish. It established itself as extremely bullish here, but it started to enter the bullish structure from this point onward. This is the point it established its first higher high and it started to get bullish. And since then, it has been bullish. It is bullish. But I think now is not a very good time to make fresh entry into it, because I think the best part of the momentum is kind of left behind. And honestly, Aisha Mota, I've been following since so long, and I even analyzed it when it was here. But for some reason, because of I think the broad market, I just couldn't bring myself to make that decision and pull the trigger on this. But it had all the telling signs of impeding bullish run. I was expecting it to come back to the 250 EMA, and I was very adamantly waiting for that. Ended up missing the opportunity. I think it's still very bullish. If you're holding it, continue to hold it, because as you will see, every time it touches the level of 60 70, it doesn't immediately decline, right? It doesn't immediately decline. It does continue to rally a little bit forward. So I think you can continue to hold on to it. It's a better opportunity cost wise. It's a better bet compared to most other sectors in the market. But I think what you also need to remember is that this is not looking good for fresh entry right now. It's a little late, don't try to catch a missed bus. Now, if you are already holding it, I think a good stop loss level for you would be 5875. But if this stock goes above the level of 6247, then you're going to need a revision of this level. So come back and check with me then. Cool. So, okay. So, with that, we come to the end of today's very long session. And as I promised, there was going to be an announcement at the end. So this is the announcement. Unfortunately, it's not a very positive one, but it is a more structural one. The live sessions, I was earlier doing them every Monday, Wednesday, and Fridays. Most of the Wednesdays I was not showing up, and some of the Mondays also I was having to miss. Fridays, so I was doing some Mondays and some Fridays, which was becoming confusing for especially for our regular attendees. So what I have decided is to streamline my activities. I'm going to come live every Friday morning because Fridays are usually chill for most people, and a lot of anxiety of the whole week has gone by, and you can objectively look at things and start planning for the next week, right? So every Friday morning is when we are going to do the market outlook series live. We are going to discuss, and we are going to do Q&A sessions. We are going to keep these sessions long. Instead of 30 minutes, we'll keep them 45 minutes. Even if there are lots of queries, I don't mind if it goes to 60 minutes. But this is what I am ready to commit to, and I think I can do better with this. So there won't be live sessions on Mondays and Wednesdays, but that being said, you won't be missing out on content from me, because instead of doing live session, I will still continue to upload videos now, because time to time I come across some chart which has some amazing insights that I want to share, but I think I'm going to create a video, but then I'm just so burnt out with doing all my analysis on my past trade, taking care of my little baby girl, taking care of my own health. It's just, it just goes to the back burner and then never really comes back up. So I kind of want to bring that into play and put out more quality content out there. So I'm going to upload stock analysis videos, individual stock analysis, much shorter videos, and do these long Friday live sessions with you all. So that is that. Thank you so much for joining in. Um, thank you so much for joining in today. I will see you guys live again next Friday. But do please join my Telegram channel, and do follow me on YouTube as well. Subscribe to my YouTube channel also if you want to get the videos as and when they come out. So I've posted my Telegram channel. If you join my Telegram channel, you'll get all information about my YouTube and my services and everything. Thank you so much for joining in today. I will see you again next Friday live. To sign up with the Zoom link I have already shared. I'm showing it on the screen once more. Have a great weekend ahead. Everybody, take care.